Hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right. So it is right now 10:14 p.m. in Arizona time. My apologies for my East Coast people. I'm going to try to make a live a bit earlier in the coming weeks. It's been very busy. Just got off of working, so been as always grinding away. So I wanted to just go ahead and take some time here and kind of bring us up to date of what's going on, what's happening in the market. Obviously, I'm going to leave some details out, but I'm going to talk about things that I'm focused on. Right, a couple things that I want to do real quick is I want to add a couple of diagrams I want to talk about. This was these questions kind of rose up on Twitter, so I wanted to make sure we're good. I got some cool, funny videos I want to mention, and we'll go from there. Okay, so overall, guys, Clover today's up 1.64%. On the 5 days, up 8.77%. 1 month, it's in the positive. 6 months, it's down 12%. Year to date, it's up 18%, which is pretty good if you compare it to the S&P 500, which is X, which is actually down 8%. So we're actually doing really well. And if you look at, I think SoFi is actually down 22%. So imagine how these SoFi investors must feel right now, given that they were at $18 and then they kind of went down. So imagine, Clover went to 18 down to, let's say, 9. A lot of people will be upset. But again, this is the whole point about shaking retail investors out, right? So we're going to talk about the technicals right now, and then a couple of things that I also want to discuss. But even actually, before we even get to the technicals, let me just go ahead and discuss them real quick. So, this is the S&P 500 up top, and you could see this, the S&P crashed, right? And as the S&P started crashing, smart money started increasing, right? They started buying the dip. And as soon as Trump lifted his or postponed his tariffs to 90 days, smart money peeled back a little, still elevated, but dumb money basically soared, right? So you got a resurgence in dumb money, and that's obviously reflective. I find it interesting because most recently, for all the people that use Robinhood has, again, I don't agree with their hedge fund and inside data. There's a lot of missing information here, and they're getting it from tip ranks. So there's a lot of missing pieces here. So this is not correct, but their own data, Robinhood data, which is what I'm interested in because this is the Robinhood app, it shows that Robinhooders, really April 2nd, obviously before that, they started selling, and they started selling a lot. And you could argue the beginning of April, a little bit towards the end of March, but they were selling a lot. And all of a sudden, right when Trump reversed and postponed his tariffs, you see that bump that you see, that little green line right there that you see? It's literally corresponds to this jump right there. It's kind of interesting because it's really cool to see how this is more of a macroscopic view of what's happening in the S&P 500. This does not include Clover Health. Clover Health is not in the S&P 500. But this ultimately shows you kind of what smart money and dumb money is doing, right? And I find it interesting that, it kind of follows some form of correlation, right? If you can't see it, you may have to want to pause the video and kind of line by line graph it. But, you could see, here's the beginning of April, right? And then dumb money started to sell. Okay. Well, here's the beginning of April, and then dumb money started to sell. And it wasn't until April kind of 10th that we see they start buying. And just to kind of show you here, because I know sometimes, things are a little hard to view. Let me just go ahead and let me see here. Let me take a little screenshot here. So this is it being labeled. You could see April 10th is this data point here. So you could see it started to turn positive. It went from this data point to that data point. So you could see April 10th, you saw this resurgence. And after April 10th, more dumb money started buying, which is equivalent to April 10th here. You could start to see more green lines. There certainly isn't green lines here. There's a lot of selling, which is indicative to what this section is right here. So this section right here, it's correlative to this section. Again, through statistics, correlation does not equal causation, but you can see this rise is up right there. So that was the point I was trying to prove a couple days ago, but we got into schematics and really lost the point of the correlation. But I find that pretty interesting because it kind of shows you what's happening in the S&P. You can somewhat correlate it to what's happening in a specific stock, Clover, which I find is very interesting, right? And again, this is not rocket science. It's very simple data. If you can break things down to simple, stupid, you understand them. If you complicate things, then most of the time you probably don't quite get it. And these are the words of Albert Einstein, right? So I always like to look for simple explanations for things. And obviously things do get complex, but I would say this pattern has served me pretty well. And I like that this data is available now. I commonly check it. So with that, that's pretty much the trend I wanted to talk to you there about. Now, interestingly, this is corporate insider buys. This conglomerates all the insider buys. And you can see, imagine, having, this YouTube channel available, you imagine the level of just detail and knowledge you would have gained. The higher the number, it shows you more insiders are buying. And you could see in 2011, there's a great time to buy when you had this dip. A lot of corporate insiders were buying. A lot of people were scared that the great financial crisis may come back. Then you have 2016, the Federal Reserve started increasing interest rates and corporate insiders were buying. Then obviously Federal Reserve started increasing interest rates here. Corporate insiders started buying, and then they pivoted. Stocks went up. Corporate insiders stopped buying, and all of a sudden stocks dipped, and corporate insiders bought at the level of never seen before in the history of at least this 10-year graph, right? And obviously we had the bear market. Corporate insiders were buying on this dip. And then we had this somewhat drop as well, and corporate insiders were buying as well. Interestingly, now stocks are dipping, and you could see corporate insiders have increased their positioning. They're buying, and this is a rapid increase. So corporate insiders are actually buying right now, right? I know, again, the argument is, well, Clover's not buying it. Well, Clover technically did bought. I think Vivek bought 2 million shares. But again, this is for the S&P 500, right? And again, I'm using this almost as a temperature check, right? Let's say, for example, there is an infection of the foot, right? And the infection of the foot hasn't yet spread yet, or maybe it's spread a little bit. Well, if I go ahead and take a thermostat and put it under your tongue, and it shows that there's a little fever, I can assume that the fever is potentially coming from the infection of the foot, right? It's not directly, I'm not sticking a thermostat directly into the infection of the foot, but I'm using the whole systematic analysis here, right? So what I'm using is the S&P 500, and I'm seeing, well, if corporate insiders are essentially buying, and they started to buy, then potentially maybe now stocks may be formulating a good opportunity risk reward buy zone, right? But then that leads to the question, well, how do you know a stock is a good buy or not? And that goes back to the central concept of this channel, which is intrinsic value calculation, right? Again, I don't want to basically repeat things. I have over 800 videos showing that. But again, that's the whole semantic of the analysis, right? Everything puts its place and everything comes together. And the beautiful part about this is that everything has its own place finder, and it all works holistically together like a big wheel, like a big machine, okay? So with that, before we get into kind of the market dynamics of the VIX and the market overview, I have to give a disclaimer. This is going to include some math. Whenever I put a square root in front of something, people freak out. But if you follow and understand this, then you probably know more than 90%, more than 99% of people in the market. Probably, let's say 95%, okay? Okay, so before we do that, let's go ahead and talk about kind of the Clover graph here. Okay, so what's going on? Ethan, Clove to retirement. Just wanted to go ahead and give this preface real quick. So as you can see, the purple line. First off, there's a lot of spaghetti noodles here. Okay, there's a lot of lines. We're gonna break them down. Okay, this was the earnings support right here, and the stock essentially fell down. We had earnings here, and the stock basically fell down. There's always some form of a pre-anticipatory run up towards the earnings. Do you think we might get that? I don't know. And we may get a drop post earnings. I don't know. We still have some time. Could this be the one that we get an earnings and then we go ahead and go up? Or could it be that we get earnings and then we break support? Again, very difficult to say. But what I have right now is I have an upper bound purple line and a lower bound purple line. And this is kind of the oscillatory mechanism of kind of how Clover's been behaving. Okay. This was my buy zone. I got better than my buy zone. In fact, it touched the 200-day simple moving average. The beautiful part about this is now the 200-day on the daily is quite magnificent. Is right here is $3.27. That is impressive, right? The fact that the simple moving average of the 200-day is above $3 now, when basically back when it was at 60 cents, it was literally at 99 cents. The fact that it moved this rapidly, that's beautiful. Obviously, it's mathematically calculated, but I just find that so beautiful. How a year ago we were literally 60 cents. Literally a year ago we were 60 freaking pennies. Okay, so it shows you the move. Imagine what can happen in a year from now, or 2 years from now, or 3 years from now. So a lot of things need to be kept in context, because a lot of people maybe be upset. But look at SoFi, right? Imagine SoFi. It broke out, and now it just basically broke, and now it's under the S&P. It's under the 200-day moving average, okay, for SoFi. But for Clove, it's battling hardcore. It has really battled that 200-day. We're not under the 200-day, right? And then for argument's sake, the S&P 500 is under the 200-day, right? This is what's kind of freaking people out. Are we in a recession? Are we in a bear market? These are kind of the discussions that are floating around right now, right? And we'll talk about that, right? But the beautiful part is, we've developed such a strong level of multi-linear levels of support that I'm very confident that that I don't think we're going to see 60 cents ever again. I mean, you could confidently say that, I would say, right? So there's that, right? And again, it's not financial advice; it's just my opinions. And then you could see this skinny blue line here, and skinny blue line that's going downward, and skinny blue line that's going upward. You could see that the stock price, that was the ascending triangle, right? Right, and the ascending triangle. Here it is: bottom triangle, bottom wedge. I mean, I guess it's this AI is able to show you, right? Right. So that's really cool, right? That's nice. But you could see it shot up, right? And then now it's falling back into the support line. And this was my buy zone, and it fell below my buy zone, which is actually amazing. So I was able to capture some pretty good gains. So now that we went ahead and analyzed the chart pattern here, what I want to do is I just want to take some moments to just kind of talk about the RSI. So the RSI comes in two flavors. It comes in 70 and 30. 70 is overbought, right? And then 30 is oversold, right? So this line above here is overbought. That means it's getting pretty hot. It's basically craving for some type of consolidation. And then you could kind of reference that here with the MACD coming into a negative form with the moving average convergence divergence. And then, and now you're starting to hit sections in which we are in oversold territories. So last time we were in oversold territories back here, we were here at $3. The last time it was here is we retraced back to November and December of 2024, right? So again, we're formulating some form of what we essentially did is we replayed the playbook between Q3 and applied it to Q3 to Q4, and then now applied it again to Q4 to Q1. So based off of this, it seems as we are recovering and we are slowly on our way towards potentially a new high, right? But again, it's complicated because we have a lot of uncertainty regarding the market, right? So a couple things that I wanted to talk about in this video that I find interesting is, the next earnings is supposed to be in May, May 6, 2025. And I find it quite fascinating because, if we go in and, talk about Vivek, not Vivek Verswamy, Vivek Gurdapelli, the founder of Clover Health, he's speaking from a level of confidence. I mean, it's kind of interesting. Go on Twitter and go see what he's saying, right? He's pretty confident, right? And this is the guy who's kind of, pretty, he strikes me as the person who only talks like this when he knows the cards he's been dealt. Now, obviously, the quarter was over many weeks ago, right? So, Clover Health board members, Andrew Toy, Peter, they all know their numbers, right? They know their earnings, right? They know their they know exactly, they're in the quiet period right now, right? So they know how they're going to do, right? So I find it interesting kind of to see how this plays out, but I feel like we may get some form of an earnings surprise. Again, this is pure speculation, okay? I don't know what they're going to post, right? But what I am going to tell you based off of I'm a pure fundamentalist is that, obviously we have technicals here, right? But I would say I like fundamental analysis. I would say the biggest thing I'm looking at right now, and it's based off of the chart, it's pretty bullish, right? But we were already in a downturn, and we have to obviously thank our beautiful Trump for this in regards to the tariff wars that's happening now. But the biggest thing I'm going to be looking at is the free cash flow, right? Free cash flow is what I'm going to be looking at, and it's a lot easier to just kind of show you rather than just talk about it. So we'll go ahead and just put this here, and we'll open up the financial data and analytics metrics chart. Yeah. And we'll just kind of full screen it here real quick. And this is part of the premium Al stock trades. Again, this is all lifetime access. So it's really nice to really, teach you exactly how, you have access to what a Bloomberg terminal looks like. So, it's really nice to see this here. But the big thing here, let me just kind of just graph the free cash flow, is for the first time in Clover's history, we have been, free cash flow positive on a fiscal year basis. And you can see in the AI summary, free cash flow 2024 turned positive, right? This is our beautiful AI summary. It gives it to you. It recognizes it and then interprets it for you. So, I find this pretty interesting, right? The first time ever, right? And you could go ahead, look at Tesla, look at Enphase and AMD, and you could see what happens to the stock price once this hits, right? For Tesla, free cash flow hit positive right here for the first time in 2019. Right. And then what happened to the stock price, you think, after 2019? I'm not even going to grab it to you. You should already know by now. If you don't, go ahead and look it up and please learn. Okay. So what I want to do now is I want to look at the quarterly results because I find that you can find something interesting here. So for the quarterly results, you could see that Q1, Q2, Q3, but Q4 was negative. Now, of course, Q4, about $39 million of that, or I guess $47 million is discontinued free cash flow. So at least 86 minus 47, at least 39 of this is negative, true negative. So I would need more clarification on Q4 of this coming year of 2025. I'm a bit worried for Q4, but the biggest thing, I'm looking at right now, because you could only look at what's ahead of you, which is, I guess, less than a month from now. I mean, like, how many weeks here? What do we say? May 5th, May 6th? Let me pull up the calendar. 1, 2, 3. Yeah. So pretty much Clover's earnings is like in 2.5 weeks, right? So the big thing I'm looking at right now is I'm looking at this number here. Q1 of 2024. That's the thing that I'm looking at right now. Is Clover Health going to beat its free cash flow for Q1 of 2025? Anything above 25 is bullish for me. If it's like 10 or 5, I'm not really going to be happy. That means I'm going to be like, okay, this is going to be hard. But given kind of the gestalt of my investing style and kind of looking at Vivek, how he's pompously talking, I'm not trying to say it in a negative way, but he's talking from an element of confidence, and I don't think he's talking from an element of bullshit, right? He doesn't seem to me as a bullshitter, right? I'm thinking that Q1 2024 is going to come in a little higher, and only time will tell. We'll see. And that's going to help me ascertain and be able to formulate an intrinsic value calculation appropriately, right? Because it's going to allow me to figure out kind of what the intrinsic value is for Clover. Okay. So I mean, like, let's assume it's going to be like, 44. So let's say we get a plus 10 free cash flow bump on all these elements here. Okay. So let's do that. Okay. Let's say we get 10 plus 10. So for Q1, it'll be 25.49 plus 10. I'm going to do the math right now in front of you. 44.36 for Q2 plus 10. And for Q3, 49.59 plus 10. Again, I won't know what it is until I see it next month. But just giving you an example of, let's say if it was to plus 10, we can assume it'll be plus 10 for all of them. Very tough to say because that's dangerous. But we could kind of take a linear approach, right? And then and the reason why I'm comfortable doing that is because that's why we have different types of cases: bull case, base case, bear case, right? That augments any type of differential math discrepancies that we may add, right? So for Q4, it's 86.15 negative, right? So we have to do a couple things here. We know that 47 million is no longer going to be existent in that. So we're going to add 47 million, right? And we're going to add another 10 million, right? Because we're assuming 10 million flat out on both sides. And let's go ahead and do that math. And let me just kind of bring this to you here. And let's kind of figure out kind of what we get. So obviously this is for, Q1. Let me just kind of zoom in here, right? This is for Q2, right? Look back at the graph here and you'll see that's where I got these numbers from. This is for Q3. This is not rocket science, guys. Q4. And again, these are my projections for 2025. I'm assuming 10 million more, okay? Right? Again, tough to say. Don't know. We'll figure it out. It could be maybe only 5 more million. Who knows? But assuming this, that means we're going to get 35 million for the first quarter. Okay. Let's add this one here. 54.36 million for the second quarter. 59.59 million for the third quarter. And then this is going to be kind of weird. We're going to get negative 29 million. Because again, for all intensive purposes, I don't know, right? We're going to get negative 29 million there. So now we're going to go ahead and we're going to add these numbers together. Right? We're going to add and we're going to see what my projection is. And again, this is preliminary because I don't even know what I'm going to revise this next month because I don't even know what Q1 is, right? So let's go ahead and add these up. And by doing that and adding these up, you get 120.29 million. By doing that, we then open up the home page here, open up our price target software, again, all part of lifetime access, right? And we could go in and type in CLOV, but this time we'll type in the free cash flow here. And then here's the problem. I'm going to do the most extreme bullish case, which is 37%. I don't think this is going to be the case, but if we do 120.29 million, the bull case is $36, the base case is $24, and the bear case is $17, with a recession of $8. The reason why I'm not confident in saying 37% growth rate is because Donald Trump just gave a free bailout to the incumbents. So I think the disruptive curve is going to be pushed to the right. Now, do I think we're going to see these prices in 10 years? Of course. But to be more humble, I would say let's do 20% first, and then we'll do 25%. So if we do 20%, we get a bull case of $11, a base case of $7.78, a bear case of $5.82, and a recession case of $3. So I think we're going to get, in the next 6 months or this year, I think we're going to see anywhere between $5 to $11. Now, if things, we get more guidance to suggest that we are going to be able to grow like this for a while, then I would say 25% is pretty humble. And if that's the case, we're going to get anywhere between $8 to $15.86. Okay. That's pretty damn good, right? And again, imagine if they are able to say, no, we're still going to grow 37%. In fact, we can grow 60%, but we choose to do 37. So we could, hold on for a sec, guys. Hold on. Sorry, guys, I'm back. Okay, so this is kind of the thing. I assume I keep saying so, right? My bad. Yeah. So this is what I was thinking. Okay, and again, it's very hard to do these lives, guys. It's late at night, right? But I do this to kind of show how these Wall Street folks are doing these calculations and running these assumptions. So this is what it is. I really think that we're going to be able and can be achieve. We can achieve these prices. I would say humbly 20% and based off of this, we'll see. But again, this is assuming for the full fiscal year. But again, the stock market's ahead 6 months, right? If you don't believe me, let's go ahead and just do some calculations real quick. Okay. So if you go ahead and take a look at the annual right now, okay, and if we were to just look at the free cash flow, let's look at the quarterly. You could see from a free cash flow perspective for Clover, we were doing 25.49, then 44.36. You could see that people were anticipating that Clover is going to be free cash flow positive this year, right? So if we were to apply this scenario, and they were growing at, let's say, 9.33%, and we had around, let's say 80. We do that. We run this calculation at 80 at a 9.33% growth rate, and look what you get. You get a bull case of $8. You get a bull case of $3.39, a base case of $2.49, and a bear case of $1.94, and a recession of $1.13. But remember, the stock price was trading at the time. The stock price was trading at 60 cents. So if you don't recall, back in April of April 19, the stock price was 60 cents. We got our earnings here, and the earnings shot us up, right? Many people are like, again, retail investors, I call them dumb money. Wall Street calls them dumb money, and I'm honestly starting to agree with this, right? You could see it, retail investors are so simple, right? They're very simple-minded. They see two patterns, and they think the pattern repeats indefinitely. Oh my God, the earnings report happened here and the stock price dropped. And the earnings report happened here and the stock price dropped. And the earnings report happened here and the stock price dropped, right? But again, the earnings report happened here, but the stock price went up. And a lot of people got screwed here. A lot of people, again, retail investors are dumb money. A lot of people, here, they sold at $1.50, and then Vivek bought, and the and the stock shot back up, right? Because they, retail investors, they think they understand the world. They think they understand patterns, and they don't understand that there's an infinite amount of possibilities that can happen. So what ended up happening is Q1 happened, the earnings report came back, and it showed, this is what it showed. Okay. It showed for Q2, right? It showed $44.36 million of positive, right? It showed they were both positive. And then Q2 also showed, from a net income perspective, Q2 showed that they were positive on both ends, right? So that shot up the stock price like no other. Okay. So when they did that and they ran the analysis for Clover Health, they said, you know what? Clover Health has the potential of, because what they did is they did 25, let's say plus 44. That's about 69. Remember that? 69 divided by 2. Whoops, sorry. 69 divided by 2 is 34.45. Multiplied by 4 is 138. And they basically shaved off half and then they said, we could do 80. Or, in fact, you could go ahead and let's do it accurately, right? So I'll show you what Wall Street did, okay? What Wall Street did is they went ahead and said, okay, well, Q1 was 25.49. Okay. Then Wall Street added the 44.36. Okay. They went in and added that. And then they said, well, if I divide it by 2, on average, they're going to make 34.9 per quarter. There's 4 quarters per year. They said 139 is going to go is the free cash flow. They have $39 million of ACO payments. So that leaves 107 of free cash flow. They put in 107 here. Watch. This is going to be interesting. And the Clover is growing at 9.33%. So what does that tell you? Look at the bull case. Look at that. Bull case, 427. Base case, 313. Right? You could see that this was, 611%. Right? The problem is, if you were to ask retail investors this a year ago and say, yes, Clover is going to go to $4.27. They're going to look at you and they're like, yeah, right, with their poor mentality, dumb money lifestyle, right? Again, you can't fix, you cannot bring a horse to the water and expect the horse to drink it. I don't know the saying, but you can't expect him to do that, right? You can't lead them somewhere and expect them to drink. They have to intrinsically understand what's going on. And unfortunately, a lot of people sold out, or a lot of people got screwed up and they got called out at $1.40, $1.50, right? Because again, they don't follow the intrinsic value. Okay. So, and again, this is the bread, proof is in the pudding. A year ago, we were at literally 60 cents right here. Okay. You could see a year ago, we're up 490%. Okay. But if I was to tell you, hey guys, we're at 62 pennies here. Where is that? April 17. This is it, guys. We're never going to see this anymore. It's going to, as the year goes out, the returns are going to be less and less, right? It's going to be less and less now because they're going to average, right? But look at here, 62 pennies. Look at the return right now. What does that return say? The return says 500%. 500%. Now, and again, has it ever said 600%? Yeah, right here. Look, 677%. 677% right there. Do you see it? Here, let me show you. $677%. Let me show you again. Do you see that right there? 677%. Now, if you were to go ahead and say, well, okay, what does this say? 611%. I don't believe that's going to happen. I don't believe that. I don't believe that one bit. If I would have showed you that a year ago, that's what you would say. But here we are sitting 500% positive from where we were at 6 points at 60 pennies. Again, retail investors are retail investors. They are what they are. At the end of the day, I'm going to be making money. And the people that basically are part of our platform, we're relaxing. We're in the ocean. We're boating away in a beautiful direction. And we're going to make a killing. Okay. And, I try to help, but again, someone has to row the boat. I don't want to row the boat. I'm tired of rowing the boat. Right. I want to be the investor and I want other people to row the boat for the economy. Right. And I want to invest in it. Okay. And that's kind of what I'm trying to teach right now. If people don't want to do that, then that's fine. You can go ahead and row the boat for us, and we'll be able to collect our option premium and live like, and pretty much live like kings, right? So now with all that said, we're growing about 37% this year, right? I would say, if you really want to go ahead and say, okay, fine, 37% with, what we calculated before, which was, what was the number that we calculated? What was it? We calculated here 120, right? And we already did the math here in regarding to, we cut off 29 million here. So I would say this is pretty damn accurate, right? We go ahead and put this here, right? We update projections. I think that Clover could go anywhere between $17 to $36. And again, people are going to look at me now and be like, you're crazy. Given the tariff issue and given there is a fundamental change, I do believe that because Donald J. Trump went ahead and gave all Medicare Advantage members an effective rate of 9% increase, this is why I was wailing about it, right? A lot of people were telling me, don't worry about it, but then people realized what the increase was. And it was in Andrew Toy's post, right? That's a big deal. That's a 9% increase. Obviously that's good for Clover, but it's a lot better for Humana, who need it, right? They need it a lot because, so it does push the disruption curve to the right. Now that they have 9%, then they can potentially now probably regain back their stars because the world's not fair. And potentially they may not be able to increase their ability to pull back. They might start pulling back in, which will limit the amount of switchers. Again, we talked about this in the video before, right? Because of that, I'm comfortable of dropping this down to 20%. I think 20% is humble, and it shows you a stock price of anywhere between 5 to 11. Now, again, could it go to 25%? Okay, fine. Yes. All right. Then instead of 5 to 11, it'll be 8 to 15. Okay. 8 to 15. Right. But again, let's do 20% for now. Okay. Let's do 20% for now. And we're going to call it $5 to $11. The stock is currently trading at $3.70. Right. So that's anywhere between a 57 to 199% increase. And whoever says, oh, you're full of shit, I don't believe this. All right, man, whatever. Go ahead. Right. We're already up we're already up close to 500% on the year right now. Right. It shows you, how we're up right now. Right. It is what it is. Right. You can't fix ignorance. Right. All right. So I hope this makes sense. And again, I've been doing this for over 10 years. And again, people like me don't show this information because why would they? Right. I have my own family. I'm going to support my own thing. I'm doing good for myself. Why go out here and show people? I'm trying to basically break you out of the matrix, right? I'm trying to show you that there's a way out of your 9 to 5 freaking nightmare, right? The people that you work with, have you seen it? How colleagues talk bad about other colleagues? Like everyone's like obviously like there's some areas where you can go into and places that you could be in that have a loving atmosphere and people are very happy with their lives. But like if you go to a lot of work cultures, it's very toxic, I hope it's the minority, but in medicine, it's so toxic, guys. I tell you, imagine out there in the corporate world in America, right? In America, it's very toxic. So imagine having to work like that, right? I mean, I don't know. Good morning from Belgium. I don't know if Belgium is like this in terms of the work culture. I think it's just an American thing, right? But the point that I'm trying to tell you is I'm trying to teach you how to break out of this cycle, right? Who the hell wants to wake up early in the morning and to be on an Excel spreadsheet for the big man, right? I mean, if you want to do that, by all means, go ahead. We need people like you because people like you are what help the company make money and report earnings. So we can do our intrinsic value calculations and make money off of your hard work, right? So thank you for people that want to just do that. But if people want something else, if people want basically another path, I'm trying to show you this path. Okay. It's kind of interesting. We got, Belgium and Sweden here. I normally don't do lives in the night here. So I bet you right now, if you look at Sweden, I'm curious. I bet you it's like 7:53 in the morning right now in Sweden. How about Belgium? It's like early in the morning for you guys. You know what I mean? Like, what is this American doing up so at the same time? You guys are, it's kind of funny, right? I got a comment here. Al, can you clarify about are the 90 days above the 20/30 condition in place of Andrew and Vivic? What 90 days is it? Oh, wait. Oh, I see. It depends. I think they can always also postpone that. I wouldn't basically I wouldn't hang my hat on this number. I hang my hat on fundamentals and how the company is doing, right? Because ultimately, at the end of the day, yes, that's a good incentive for them, but I'm seeing the company headed in the right direction, right? Oh my God, 1:53 in the morning here in New York. Man, I love you, man. It's freaking late at night in New York. I appreciate you, brother. No, I appreciate you supporting the channel. Yeah, I mean, I'm sorry. It's late right now. Um, I didn't mean to make it this late. It's just, life, life is busy, 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 right? So my apologies for being late. No, I appreciate you, man. Appreciate you a lot. It means a lot. Let me see here. What else do I have? You know, okay, because again, I don't want to make this a late live. We're already at 42 minutes. I don't want to make it's already late. Uh, maybe we could talk about this tomorrow, right? About the VIX. Given that it's already late, so we'll talk about this tomorrow, okay? Because I don't want to fast forward through this because this is pretty important. It's a calculation that looks at basically. Okay, so the TLDR of this all is that usually when the VIX falls under 30, it signifies that we've already seen the bottom. Now, again, could we retest the bottom? Yes. It doesn't mean that it's over. It's all smooth sailing from now. The question that Wall Street's asking itself right now, is this a V-shape recovery? Is this a V-shape recovery? What is a V-shape recovery? A V-shaped recovery is when stocks go down, they go up directly. Or is this a reverse L? What is a reverse L-shaped recovery? Let me see if I can. There it is. So like a reverse L shape to me, stocks consolidate for a long time and then they shoot up. Okay. Like this. Instead of a V shape, it's an L shape. Okay. I personally think uh, um, I I certainly think that we're going to be in an L-shaped recovery rather than a V-shaped recovery. And I think by the end of the year, we still may end up being positive. Again, we're only 4 months into the year. Okay. So I hope that kind of makes sense on what I'm trying to say there. We'll investigate this more. Okay. We'll talk about this tomorrow. I mean, honestly, the big thing here is, I'm looking at, 465 to 468. If it breaks above that, then we could get to 477 on the QQQ. Palantir looks like it's growing strong. It's probably going to go ahead and have a short-term pullback to retest new highs. The big thing for Bitcoin is 86 to 90K is the next barrier. I'm looking at that. Once we pass that, we should be on our way. I think there's going to be a short-term bump, but between April and July. And I think there's going to be a broader setup for a more explosive rally more to year end, right? So I think the bullishness for Bitcoin is intact, given the whole reserve and all the stuff that's happening right now in the Bitcoin. I'm not an investor, but I like to use this as a prognostic indicator of risk on. Okay. Here's the JP Morgan. We're going to talk about this. Let me go ahead and just 655 in UK. Got a comment here. Hi, Al. Appreciate what you do, but talking about a 600% gain only is quite one-sided. I believe when you were a believer in the stock and started covering it, the stock price was still above 5. So that's a good point. So when the stock price, I started talking about Clover when the stock price was around $7.50. That's when I stepped in on Clover. Then they went ahead and diluted shareholders and the stock price dropped. So I started talking about it right around here. And then so I started covering it here, right? I bought a few shares here. I would say maybe about 5 to 8% of my portfolio. And then as it basically started to drop, I went ahead and accumulated, and now it's around 35% of my portfolio, which is a lot, right? So in terms of what you're saying, I understand what you're saying, but if you look at my return on Clover, I am up more than 500% of. Let me check. I have like a couple of accounts here. Let me double check. Hold on. Let me look at my return. because you also have to calculate the options as well. Okay. So looking at this here. Yeah. So I am up 320%, around 320%, right? And every time I buy more, the effective rate goes down, right? But 320%, right? Because it shows my average increasing, right? So I wouldn't say it's one-sided, because I acknowledged, and if you look at my videos, I wouldn't say it's one-sided, because my videos span back to what you call it. Let's go back. Okay, so you could see the prices that we're gunning at, and if we go all the way here, and we go to videos, and we go to popular, look at this video here. This was 3 years ago, okay? And my price target was $18 to $35, okay? $18 to $35. Now, if you go ahead and if you put a 37% growth rate based off of what Clover's metrics could be, what do you get? What do you get? $17.61? $17.61 to $36.49, which is what? Pretty much this price here. Okay? So at the end of the day, the math followed. Did the stock price go down? Absolutely. But remember, during that time, what happened to Meta? What happened to Meta stock? Meta stock used to be $378, and then it dropped all the way down to $90. So Meta, which is Facebook, a big company, dropped 76%. Okay, and now it's up 474%, all the way up to 700%. Right. So the point is a lot of stocks dropped. So what do? Right? Do you go ahead and do a margin of safety? Right? Margin of safety. And this is what we did. Here's the intrinsic value. I think Clover is a $15 to $35 stock. That's what it's worth. The stock dropped. We bought more. Do you know how much I'm up right now and how much our group is up? We have over $44.5 million of net worth in our platform, right? We've made millions of dollars. So yeah, okay, a stock drops. Okay, that's fine. But again, that's the difference between smart money versus dumb money, right? And again, I'm not one-sided at all. I say it how it is, right? As the stock price started to drop, what was I doing, right? I have a video literally saying, this is a buy right now. But when the stock was 60 cents, in fact, you can go ahead and look at a year out, I literally was like, this is a buy right now. It's 60 cents. This is book value. If you don't buy this right now, you are making the biggest mistake ever, right? And that turned out to be a very good action, right? And then that right now has made us a lot of money. And the whole point is you want to buy a stock when it's below its intrinsic value, and that's called the margin of safety. So a lot of people that bought, they went ahead and bought right here. So again, I see what you're saying with the one-sided, but again, if I was truly one-sided, I wouldn't be addressing this, right? If you have a t-shirt that's worth $10 and it drops down to 60 cents, are you going to toss the t-shirt in the trash and say this t-shirt is crap? No, you're going to buy more. And that's what we did, right? And we're on track now, I'm actually starting to increase my position now and break my 35% rule now, given what I'm seeing with Clover, especially with its free cash flow and what we're seeing right now with Counterpart Assistant. So I may break my rule a little bit more based off of the comment he made with Peter in regarding to getting someone from a big health insurer. So we'll see if that even works out, right? But okay, so we have that. We talked about this. What else? So here's the JP Morgan earnings call. And then here is the comprehensive AI analysis part of our Al Stock Trades terminal. It reads the earnings report, and it goes ahead and gives you insights. And the big thing here is they're talking about tariffs, right? We'll talk about this tomorrow, given the respective time. We'll talk about that. The big thing is, back to what you're saying, BSTL. Look at this, okay? Here's the share price. The share price has dropped, okay? Retail investors, because they're dumb money, they say because a stock price dropped, it basically means that the company is trash, right? But if you look at this green bar line, you could basically see as the stock price continued to drop, the share price has got the percent ownership of the shares held by Cube Research and Technologies. They've increased their shareholdings. In fact, this is a top 7 holder of Clover. I believe they own around 4 million shares, right? So you could see as the stock price fell, what they did is they also bought when the stock price was $8, right? So here's a stock price, right? Here's a stock price right here, right? They bought when here's the share price, right? They bought above $6. They bought when it was $8, right? So what they did is they went ahead, stock price dropped. They sold off some of their position. They did a 30-day wash sale rule, right? And then they bought back in. And then as the fundamentals started getting better, they went ahead and started increasing their position. But then what really changed is this right here. Once they saw they were free cash flow positive on the first quarter, they increased their position. They nearly doubled their position, right? The stock basically started soaring once we got that second quarter of the earnings report. And then now you could see they're increasing their shares. So the whole point is, being one-sided or not, if it was truly one-sided, then why would I not delete my videos? My videos, I have over 800 videos, right? So, again, everyone has an opinion, and it's equivalent to everyone's butthole, right? But the point that I'm trying to basically point out here is very simple. If I was to basically come to you right now, okay, and if I was to say a year ago, right, and if we go to the average free cash flow, which is around, let me see, what do we say it was? Around 100, right? And we were growing at 9.33%. We were at 60 pennies. And I said that because they're free cash flow positive now, we are going to see a stock price anywhere between $2.42 to $4.24. And we would get a 300% to 600% return from 60 pennies. A lot of people that were retail investors would basically say that, no, that's not true. I don't believe that, because they don't understand math. They've been lied to by the system in which they've learned from. Their high school and college education is nil. They haven't been taught to be able to think for themselves, and they don't understand what intrinsic value is, right? And so, of course, what ended up happening is they didn't believe that, and a lot of people sold. And, they believed that there was a pattern. Some people sold at $1.40. The stock price doubled to $2.40, $2.50, and they had to buy back in at $2.40. And then they lost that dollar of magnitude, and their shares decreased by 50 to 70%. It is what it is, right? Now what I'm saying is that the fundamentals are improving. The growth rate is growing up now. Instead of 9%, it's 37%, right? And the average free cash flow, I think, is going to go up a little higher, right? Because they don't have that ACO payment, right? So, I always try to be as transparent as possible, right? Making these lives. Everyone's going to have an opinion. Everyone's not going to agree with my method or whatnot. But hey, I've already made my millions, right? So I'm just trying to be able to help you guys, to show you how you can make millions as well, right? That's the whole point of this, right? And you guys take it or don't, right? You don't take it, go back to your normal 9 to 5 day job and live your life, right? But for the people that want to listen, and for the people that want to break out of this matrix, this is what this is for you, okay? Because I'm honestly sick and tired of this grind that has no meaning, right? Do you understand how many patients I've seen on my medical education where that they're at the end of their lives? None of them, absolutely none of them, say that, oh, I wish I worked harder. I wish I worked harder. None of them say that. I had maybe one person say, I wish I made more out of my life. Right? So again, I personally think learning this information allows you to make a lot out of your life, right? But at the end of the day, my average share price right now for Clover Health is $1.50 to $1.20, right? That's the average around that, right? And if we were to go ahead and take 3.7 divided by 1.45, that's about 255%, plus the options that I've made, which has been crazy amount of money I've been able to flip there, right? Okay, so there it is there. So there's my spiel there. And again, people have opinions. It is what it is. A year ago, if I would have made this, a lot of people would have said, I don't believe you. There's no way this thing is going to go to $3. Okay. Where it is now, it's $3.72. It was $4.86. Okay. Now I'm saying, based off of the numbers, based off of this calculation, and based off of here, let's go ahead and do this. Okay. 20%. I think Clover can go anywhere between $5 to $11. And there's going to be people on here, they're going to say, I don't believe this. That's all bullshit. That's fine. Okay. This is not for you. Okay. That's fine. Right. Thank you for being part of the rowing the boat area of life. We need people like you. Please contribute to the society. And then us, the investors, will be able to reap the awards and benefits. Sounds harsh, but that's exactly how these billionaires think. And I'm trying to show you, do you really think people care about you? Everyone is obsessed with their own life. No one cares. Okay. And that's what I'm just trying to show you all. The thing that should matter to you the most is your family. That's it. Right. And the only way you'll be able to protect your family is you need money. Right. And what I'm trying to show you is how you are able to get this currency. Okay. All right. So there's that. We talked about this. We'll talk about, we'll revisit this tomorrow. We'll talk about this. We talked about that. Okay. Yeah. Look at all these green positions. All these green positions are showing you that a lot of people are actually buying Clover Health. These are all new green positions. I don't see any red positions here. I don't see any people closing their positions. Right. There's a lot of green positions here, guys. That's pretty good. This video will go into what I've been spieling about for the past, hour. So we'll play this video right now real quick, and then we'll play this for fun. And then we'll talk about SoFi real quick in terms of covered calls and cash secured puts. And we'll go from there. Let's see here. How do I do this? No, love you too, brother. Love you too. Good morning from UK. Excellent. Let's go ahead and let's, how do I do this again? Share the screen. So let's go ahead and listen to this real quick.
The only free lunch in investing is to start with a small snowball and find a really long hill and compound that money over a long period of time. I came up with the idea that we could simply, at the time somebody gets a Social Security number, start them with an investment account, right? They can open it up on their phone. They can see that they own a little slice of Berkshire Hathaway, of Apple, of United Healthcare, and seed them with $1,000 in the S&P 500. There are 3.7 million kids born every year. If you start them each with $1,000, that's 3.7 billion. That's less than 0.1% of our federal revenues. This is less than the cost of a single weapon system that we're sending into war zones these days. It's a tiny amount of money to get every child in America into the game. But why do we need to do this? Well, financial literacy is at an all-time low.
Okay, hold on. He basically says, why do we need to do this? To get him in the game. Okay, what does that mean? What is to get him in the game? What the hell does that even mean? Okay, guys, what I'm teaching you right now is I'm teaching you how to get in the game. I'm teaching you how to get this financial data. Again, we are a financial data platform. I give you the financial data, right? And the financial data is used to be able to calculate intrinsic value. What is intrinsic value? Intrinsic value gives you the power to essentially set your own price target so you know exactly what the company is worth. Are you going to buy any ice cream store without knowing how much money it makes? No, but you have idiots buying stocks without knowing that it doesn't even make any money, right? But again, that's because Americans lack basic financial education. Look at the FINRA financial literacy test. Majority of people fail. They fail. They are financially illiterate. So let's go ahead and let's listen more.
Is at an all-time low. So only 17% of Americans could correctly answer basic questions about interest rates, inflation, financial risk, more.
Okay, so 17% of Americans could only answer basic questions. Do you think they understand what an intrinsic value? So of the 17% that are supposedly supposed to be geniuses, what of the 17%? Okay, hold on. That basically means 83% don't know crap about basic questions of interest rates, inflation, bond prices, financial risk, and mortgage, right? None of these people know that. And it's a shame. It's a shame. I know this because I've talked to many people, and I can tell you 1 to 2 know basic questions. I agree with this data. This is data given what I do, right? And I've been doing this for over 10 years. I agree with this data. Okay. This is complete BS, right? So that's complete BS. What else do I want to say? Of the 17%, what is the overall of the 17%? How many of them do they know about intrinsic value? I again, that's a good question. I don't know. I guarantee you it's probably less than 5%. There's no way in hell. I would say 1%. I mean, I've spoken to people that have graduated MBA and they don't even know shit about intrinsic value. And I'm like, well, didn't you learn about discounted cash flow statements? They're like, oh, yeah, I remember a few slides on that. Not even people that spend $120,000, more than $120,000 on finance, not even they know about intrinsic value. Unbelievable. Like, that's a fail. That is such a failure of the educational system. You have no idea. That is such a failure of the educational system. Failure. Okay. So yeah, let's see here. Good idea to build America. I agree with you. Yes. Imagine. I agree with, again, this guy, he's a billionaire. Don't underestimate his humbleness. This guy's a billionaire. He knows what he's talking about. Right. Yes, you're correct. 255. 155. Oh, yes. So it'll be 255 because I pretty much doubled my money on options. Because I did the covered calls and cash secured puts, and I was able to double my money on that. So it's actually 255 instead of 355. I was saying. So 155 for the actual stock price accruing, and then whatchamacallit, plus another 100%. But hold on though, wasn't the stock price not too long ago was 484 divided by 145? That's about 337. So we'll say 233% plus an additional 100% because I doubled my money on options. Yeah, it's about 333% gain for me, right? Again, that's because I did options, right? And I was looking at the high of 484, not right now. If you think it's going to stay at 370 for the next 1 year, 2 years, you're out of your mind, right? All right. So B-Rob is sound asleep. No, absolutely. He's dreaming about Clover going to the moon, right? So let's continue what this guy's saying because I really find this interesting.
Mortgages. This wealth gap is getting worse. It's worse than it's ever been. 60% of Americans live paycheck to paycheck. Less than half the people under the age of 40 believe in capitalism anymore. They have an actively negative view.
So, okay, this is so good. And again, my apologies for my math right now. It is late at night and this is a live. There is no transcripts. I'm not reading, transcripts right now. This is just a pure live. It's late at night and I had a 14-hour a work day with a 80-hour work week. So It's been, I worked on the weekends. So so my apologies if there's any errors on the video, right? But that's the unfortunate part of making a live with no transcripts. But I would say maybe 90 to 95% is accurate, right? And all this that we put in here is correct, given my I double checked the math, right? Okay, so based off of this, you look at the gap, right? Look at the gap. Upper income, middle income. I mean, this is bullshit. This is complete bull crap. I mean, do you think this is fair? For people that are live watching this right now, do you think this is fair? Look at the middle income. Look, they're becoming low income. What happens? Do you think AI is going to have? Who is AI going to displace? It's going to displace a lot of these middle freaking people. Some upper, but middle, right? All this is going to go down. Okay, let's keep going.
Than it's ever been. 60% of Americans.
Watch. 60% of Americans live paycheck to paycheck. Even half of the Americans earning over $100,000, and they don't know how to save. These people don't know how to save. They buy all these designers. They try to keep up with the Joneses. They don't know how to invest. I bet you go talk to these people that make over $100,000. You go talk to them about investing. They politicize investing to a point where they look bad at people that invest. It's gonna, back in the day where if people wear a mask, they're considered liberal. Unbelievable. I bet you now in the next 5 years, people that invest, they're going to look at them in terms of dumb money. They're going to look at them as Trump supporters. Unbelievable, right? Again, he just said it. A lot of people in the United States, they're starting to have a negative view of capitalism. Capitalism is the best form of economic activity we have in the world. And for the people that want socialism, go talk to people from Cambodia. Go talk to people that have escaped socialism and communism, and let them educate you on how communism was effective, right? Let's continue to listen to what he says.
Americans live paycheck to paycheck. Less than half the people under the age of 40 believe in capitalism anymore. They have an actively negative view of capitalism. That's a huge danger to America. But I understand it. Too few people participate in the upside of America. Less than 60% of people own assets that really compound.
Again, less than 60% of people own assets that compound. Again, we have made a shit ton of money with Clover Health. I mean, the options data alone is insane, right? The amount of money. I mean, look at Palantir. We called Palantir at $6.55. Palantir has more than 10x, right? Has more than 10x. It's 14 to 15x, 1,500% increase, right? That is pure compounding, right? And it's unfortunate because a lot of people that are under the age of 40 don't believe in capitalism anymore, but it's okay. It's okay. That's fine. From the Wall Street perspective, you need those people not to believe in capitalism. They need to work their 9-to-5 jobs. Let them row the boat, because that is going to be your margin of safety. That is going to be your first movers advantage, because people like these people do not understand the stock market. Like I told you, only 17, or not I told you, Brett told you, 17% of the freaking stock of people in America, which is supposed to be, world class. We are a first world country, right? We're the highest GDP country. We're supposed to be some freaking amazing, beautiful country. Only 17% can answer basic financial questions. Only 17 freaking percent can answer that, ladies and gentlemen. Only 17%. So you're telling me of those 17%, we already know 83% don't know crap, right? So you have advantage by watching this channel and have access to this data. You have more power than 83% of Americans in the stock market. That's number one. And amongst the 17% that could be competitors, do you really think they understand intrinsic value? Do you really think they understand free cash flow? Do you really think they have access to over 2.5 billion outputs of institutionally graded data? No, they don't. No, they don't. They don't have that. They don't have that crap, right? So it is beautiful because, yes, this is terrible. And yes, I'm trying to solve the issue and I'm trying to teach you and break you out of this matrix, AKA according to Brett, to help you play the freaking game, to participate in the upside of America? What did he say? 60% of people don't own assets? That's unbelievable. Unbelievable. Let's continue.
So increasingly, they think the system's rigged against them, that some elites are the only ones who are getting rich and they're getting left behind. So I think it's imperative, and we have the opportunity to get everybody into the game, make everybody a part owner in the upside of America. Now, I don't want another government program, and I don't think many other people do either. So this is about creating 3.7 million private accounts that your child owns and has title to. They can see it on their phone. They can't trade it. They can't touch it. But think about the inspiration when they're in 5th grade and they see those numbers going up and they start understanding and asking questions about, what does this mean? Is this money really mine? How did it get there? Why does it grow? What does it mean to own a stock? What does it mean to compound? That's the magic. You not only start to attack these problems of the wealth gap, but you get kids to believe, to ask questions that can help enhance their financial literacy. That's where it started. That's what it's all about. We're super excited at the momentum. And
So the only issue with this program is it's $3.7 billion a year, right? Because there's about whatever amount of kids born every year. Okay. But I get it. It's still not a lot of spending, if you ask me. And it teaches them to get into the freaking game. That's amazing. I agree. And I love the idea. Now, speaking of which, very quickly, let's, join this tab here. And this is going to be funny because let me show you this, and then we'll go ahead and I'll explain why I post this video.
Excuse me. Yeah. Is that your client?
Yeah, I do all right for myself.
I'm trying to put it together. You got your fucking nice car. We live in the same building. I'm not understand how much money you make.
I don't know. 70,000 last month.
The fuck out of here.
I'm serious.
Yeah, no, I'm serious too. Seriously, how much money you make?
I told you, 70,000. Well, technically 72,000 last month, something like that.
You made $72,000 in 1 month.
Yeah.
I tell you what. No, everything's fine. Hey, listen, I quit.
All right. So that's the point of that video there. Okay. So what was the point of that? Okay. So let me go ahead and make sure we get this here. Okay. So let me share this one here. Okay, good. So let's go to SoFi. So right now, if you look at SoFi, now on average, you may have to adjust the numbers based off of how much you have, but on average, we got around, people that are inside of our stock terminal have around 200,000 shares on average, each person. Obviously, there's some people that have 1,000 shares, and there are some people that have 3 million shares. So it varies, but I'm going to go ahead and give about, because I ran the numbers at 2,000. Let me just double check if I got this right. 2,000 here, right? Let me see. So if you pull up the options chain for SoFi and look up April 17, and let's say whatever 1050, right? You want to get the one you don't care. You're just trying to collect. At this point, the intrinsic value is what it is, and you're trying to collect options data. Yeah. So that's about 96,000. So check this out. 96. Let me just do the calculator. $96,000 per week. Okay. Multiplied by 4. As of right now, if you were to do options for SoFi, you could make $384,000 every week. Now, again, we got to be a little bit more humble with this because we have to account for market discrepancies. But assuming you have 200,000 shares of SoFi, that's about 2.1 million. Okay. You take 2.1 million and you divide it by 384,000. What that will do is that will show me the effective rate of the rate of return per month. So that's about a 17% return. That's a bit ridiculous. Okay. So let's assume, and let's say I want maybe 20% of that. So if we do 20% of that, that's about 3.5%. So off of this, let's say that we're going to take only 20% of that. So imagine every month, making $76,000 times 12, which is this much. $921,000. And again, SoFi every month right now is paying 17% of whatchamacallit, of covered calls, right? Obviously, for options, this number goes up and down. But if you really want to be humble, we can call it, instead of 17%, we could say 3.4% or 3%, 3.4%. Imagine right now, SoFi is $10.94. You obviously can make 300,000 plus right now per month, but how sustainable is that? $76,800 per month is pretty sustainable. That's $900,000 plus per month. Now hold on. Let's do the math again, and let's divide that now over. Let's divide that now over the overall how much SoFi is. That's about 3.5%. Okay. Now let me give you an example, right? Because Clover's around 3.33% on average. Obviously, Clover's paying more now, but now what happens, let's say, when Clover goes to $35, and let's say you have 200,000 shares, you'll have $7 million. If you take this multiplied by 0.0333, which is essentially 3.33%, you'll be making $233,000 per month. Obviously, during earnings month, you may get 1 to 2 months of crazy earnings where you might even get this much money. You might get around 1.1 million per month for maybe 2 months, and then you'll go back down to to $233,000. So multiply this, let's say, by 10, and add another million or two. You'll make anywhere between 2 to 3 million per year. Isn't that insane? Again, I know it's hard to believe. It is what it is. I'm sharing with you my opinion. And later on, once you see kind of where things land and how things are, people are going to realize, oh shit, this guy was right. Right? Oh, well, all right. Right? But this is the beautiful part about being able to be part of the upside of America. Okay? It's pretty insane. Like, I'll give you an example. Let's say, you have 200,000 shares in Palantir. Okay? And let's look up the options chain for Palantir. Let's see. The options chain for Palantir right now. Let's look at Palantir. The options chain right now, if we were to do 200,000 shares for this Friday, guess how much it's paying per week for Palantir? $770,000 per week. Multiply that for 4 weeks, you're making $3 million a month. But hold on. Palantir stock price is $95.90. It used to be $5, $6, right? If you take 200,000, that's about 19 million. Now you take 19 million and divide it by this. That's about 16% per month. Now, obviously, that's a bit high for Palantir, I would say, but that's what it's paying right now. If, again, we take the same amount, let's say we take 20% of that, we get 3%. That's fine. 3% of 19 million, that's $574,000 a month. Multiply that by 12, you're making $6.9 million a year. So you can see how this compounds. We talked about this before, and let me see if I can find it. I don't know if it saved it. My Sketchpad. You think it saved it in the history? Oh, it did. I don't know how the hell it knows. That is impressive. Okay, so we talked about this before. We talked about it many, many, many years ago. Okay, you invest 20% goes in covered calls and cash secured puts. You make your money from this. You essentially do the covered calls, and you take a subsection of this, and you buy homes. Okay. Your homes that you buy, you rent them out. 1% goes to Joy. The rest of the homes for the mortgage, you comes in and you invest this. Okay. The beautiful part is what happens when there's a recession? Stocks go down. Okay. Stocks go down. Home values, over 10, 15 years, they're going to go up over time, right? Against inflation. You go ahead and do a mortgage, in terms of a HELOC, you pull money out, you have a new mortgage now. Who pays it? Your tenants. You take this new money and you buy stocks that are depreciated because there's a recession. And the cycle continues over and over and over and over again. Just disclaimer, owning homes is hard, right? It's very hard. You're going to have property managers. You're going to have to save money for tenants not leaving or, tenants vacancies and issues and legal stuff, right? But the point is this is a system that people are doing, right? I've entered the system now. It is impressive, right? And it's only going to get better as these cash secured puts get stronger because of the intrinsic value for Clover is going to get there. Okay. So again, there's a lot of free information here. Obviously it's packaged in not the best way, but I don't have time to package it for you in a good way and spoon feed it for you. Right. That's where our platform is for. Right. The point is, the returns are proof right here. Look at the year returns. It's insane. Right. And I think that this stock was so undervalued and it's going to be amazing. Right. I mean, I cannot wait. Right. It's going to be pretty good. So let's see here. Appreciate you. Yeah, definitely full force tonight. The globalists want worldwide communism, China style, and they are universities nudging kids that way. Absolutely. Oh my God. Universities are nudging for social. I mean, they even nudged me. One of my degrees is I have 3 undergraduate degrees. One of them is in neuroscience, the other's in physiology, and the other one is in sociology. The sociology nudged me towards communism. Like, are you serious? Get out of here, right? They have no idea what communism is and probably the most destructive ideology ever created. I agree with you. I completely agree with you. And a lot of these people that teach, at least they taught me, a lot of these people don't have a lot of work experience. They don't have a lot of work-life experience, and they haven't really been in a situation of crisis, and they haven't seen a country get torn by communism, and they haven't even lived through communism, right? And the whole beautiful complaint, people complaining from their iPhones and Starbucks, right? That's the beauty of capitalism. It gives you an opportunity to complain of a system that you never even were born into, right? The point is capitalism works. A lot of people don't believe in it. That's fine. That'll be your advantage, right? And that's certainly my advantage. Again, a lot to unpack. We can go on forever, guys. Right? It's been an hour and 25 minutes. We can go on forever about this. I'm very passionate about this because, this has changed my life. All right. This information has changed my life. You understand how crazy this is? It is insane how much this information has changed my life. It is unfortunate that what corporate America is right now. It is sad that corporate America is like this. They bring people in and they turn people into boxes, right? And I'm afraid that some people, once they get turned into a box, they can't break out of this. It's a shame. They turn into an NPC, right? And it's unfortunate, and it's hard to break out of this. I'm trying to show you a way out. I'm trying to show you that there is a way out, okay? And there's going to be people that are afraid. They're afraid to leave the comfort of where they're at and be able to break out of the matrix. And that's fine. It's okay. This lifestyle is not for you. Being an entrepreneur and being an investor is tough, right? It's not suited for everyone, right? And that's fine. But what the beautiful part is, what people can't detest and what people can't people can't push away is the results of what we've been able to accomplish in our platform and in the stock market. And it's all publicly viewed on this channel, all 800 and plus videos. Okay. So there it is, guys. Love you all. And I hope that this was, educational, lots of stuff to unpack. We'll go ahead and talk about a couple of things regarding the VIX tomorrow and whatnot, but I'm very excited. I'm very excited of the future. I'm very excited of the options that's going to happen. Imagine once Clover hits its intrinsic value. Again, I think in the next 24 months, it's going to be anywhere between $5 to $11. If you don't believe me, look at the options chain. The options chain now is $9. It's going up to $9. The options chain is going up to $9 freaking dollars. What does that tell you? You think it was going up to $9 when it was trading at 60 cents? No, it wasn't. Okay. It was going up to 2 to 3. Again, it's all about intrinsic value, right? And unfortunately, not a lot of people know that. And even if you stick it to their face, they're not going to believe that. But that's okay. Those are the people that are going to sell you the shares when they at a low price. But don't worry, they will buy them back from you at a high price, because that is the simulation that they are in this program. And they don't want to change the software in their brain by investing in themselves. They want to continue with the software in which corporate America injected in their brain, but it's okay, because that software makes corporate America rich, but also it's what's going to make us rich. All right. It is what it is. This is the hard truth. But again, this channel is all about finding the hard truths and speaking about it. Right. Because again, society and the matrix wants to keep you poor. They want to keep you in debt, and they want to keep you working until you're 65 and potentially over. Right. They want you to die working for the system. And what I'm trying to show you is there's a way out of this shithole. There's a way out of this nightmare. Okay. God bless you all, and I'll see you on the next one.